You know, I've got to admit something to you. For years, I've been performing this figurative magic trick where I take inanimate objects and I magically transform them into profitable investments, commodities into real estate.
Oh, wait! We have found the witch!
Stick around until the end and you're going to know how to perform this money-making trick, if you will, that I've been doing. And there is a good bit of learning to do from here until the end. And I think you're really going to like this. Yep, if you own real estate, you are a substantial bulk commodities investor, and perhaps you didn't even realize it. Oh yeah, that's got to give you some swagger this weekend. Hey, I've got a lot more compliments where that came from too. Hi, I'm Keith Weinhold. This is Get Rich Education. Look, every property that you own involves your direct ownership of rapidly inflating commodities and components. And these often include things like aluminum and concrete, marble, sand and gravel, lumber, myriad plastics and petroleum-based products. That also means you own copper wire and bentonite, glass, asphalt, cellulose, gypsum, steel, and other hardware. Think about all those components and commodities that go into every property that you own, whether it's a rental or your primary residence. Yes, you essentially own pieces of the periodic table of the elements. Well, the value of your basket of commodities has shot skyward. Just go ahead and take a look at this. And this includes both the materials and the labor here in this construction costs index. This is for single-family houses under construction, not including the cost of the land. And understand that this price spike, this represents the greatest home builder cost spikes in data that reach back to 1964. Yeah, this index is up 24% since June of 2020. Now understand that a property includes three major cost input components. Number one are those materials, like these commodities we've been talking about. Number two is the cost of the labor that's input into that home. And number three is the cost of the land that it sits upon. Those are the three. Commodity prices are volatile, but a lot of economists feel like commodities have now put in a new, permanently higher floor. There are a lot of long-term trends that support this, like a rising middle class in India and China and some other things. The good news is that this has increased the replacement cost of every property that you own or are going to buy.
We have found the witch!
And replacement cost is that cost that is born to construct or rebuild your entire structure of equal quality and utility. It uses current prices for material, labor, overhead, profit, and fees. Now, oftentimes you see the replacement cost stated on your appraisal just before the time that you purchase the property. That's replacement cost. Understand that market value is something different. Market value is what the buyer and seller agree that the property is worth. Now, the market value, that might be affected by something like, say, a great new shopping mall is built 3/4 of a mile away from the property that you just bought. Well, that would increase the desirability to live there, hence the market value of the property. But see, that would not increase the replacement cost of the property, all those individual materials and the labor that go into replacing that property. Those are the big differences between the replacement cost and the market value of a property. Hey, go ahead and before I reveal the magic, put a like on this if you like sort of thinking about real estate in this fashion, approaching it from this different angle. I'd really appreciate the like. Now, this second one, labor costs, they're not as volatile as commodity prices. My gosh, however, they have been shooting up lately. Last year, I paid a handyman a rate of $95 an hour just to fix some things around my own home. We're talking about replacing a leaky faucet and redoing some exhaust fans and some things like that. It was $95 last year. This year, it is $125 for the same people to do the same type of work. Well, those cost types right there, they rarely fall, and that's built into your replacement cost as well. And my gosh, supply chain shortages make paying these high labor costs even less satisfying. Like a lot of times between Lowe's and Home Depot, the handyman couldn't find all the parts they needed, and then you have to end up with like a door that has mismatched hinges and these weird things. Those sorts of things that probably aren't caught up in the inflation number and should be. Now, the land cost, that's more stable than commodity prices are too, and the land cost is affected by location and proximity to things like utilities and roads and topography. Now, your land value, that's one reason why your overall property price is more stable than stocks or even bonds or even gold or cryptocurrency or something like that. See, your property, even if somehow it were uninsured and this bundle of commodities, your property, if it burnt down to the ground, it would never go to zero because you would still own the land. So today, the cost to physically replace your property has never been higher. It's reached a new higher plane. So those are the three: materials, labor, and land. Now, here's the magic trick. When you have all these commodities like steel and glass and brick and lumber, can you imagine if you bought those components individually because you wanted to invest in them directly, and you would have all these stockpiles of all these items out in your yard? That would be ridiculous. That would be really impractical to do. Well, the magic is, instead of investing directly in commodities that way, you perform your trick by transforming that bundle into real estate. Now, the tenant looks after it, and in a cash flowing property, they pay your insurance premium for you too. So you have an insurance policy attached to these commodities rather than having all these things piled around your yard. Also, these bundles produce income for you now that you performed the magic trick by taking this bundle of commodities and turning it into real estate. You also have the benefit of leverage. Yes, you get to borrow money from the bank for what would be piles of commodities in your yard. You're using leverage. You're using the bank's money.
We have found the witch!
And also, you have all these tax benefits since you've called this bundle of all these disparate commodities real estate and you performed that magic trick. You have benefits like tax depreciation, where a portion of your income now from this bundle is sheltered from taxes. And you have a tax deferred exchange, where if you have capital gains on your bundle of commodities, you can infinitely defer that such that you never have any capital gains tax. These are all the benefits you get by performing that magic trick by taking these bundles of commodities and calling it real estate.
We have found the witch!
You just couldn't do that with a pile of lumber or a whole bunch of spools of copper wire individually.
How do we tell whether she is made of wood?
Build a bridge out of her!
Ah, but can you not also make bridges out of stone?
Oh, yeah.
That's the magic. You've turned your bundle of commodities over into the best risk-adjusted asset of them all. Yes, I know that big bulk commodities investor title that I gave you can really give you some swagger this weekend. Don't get too big of a head. Are you going to update your social media profile with that title? Hey, well, go ahead and leave a comment. Did you like thinking about bulk commodities investing this way? And don't just let this be interesting. Take action. Buy properties if you want, where I buy my own properties from at gremarketplace.com. Set up one login, one time, and get access to our entire network of providers that are conducive to this strategy. Yes, whether you want to do long-term rentals or short-term rental investment property in your portfolio, that's where to go. gremarketplace.com. I'm Keith Weinhold. Thanks for being here, but you weren't here for me. You were here for you. I'll see you in the next video.